All right. Good morning, everybody. Hope everyone's having a fantastic start to their Wednesday. Some interesting price action overnight. We had limit down in Korea, right, which is pretty interesting. And we had a little bit of volatility here in the overnight session. So looks relatively interesting, right? Pretty good selling pressure there, but like we talked about there yesterday, vast majority of that move happened basically overnight, right? We didn't actually go very far away from the close of the session. So again, creating a little bit of maybe anticipation, right, for a day where the primary move occurs kind of throughout that 9 to 4. So we'll see if that ends up playing out here today, but effectively, overnight price action not meaning too much this AM. Posted copy of my trading notes there last night in the members chat. Still playing around with the format of it. I'm not super happy with that one yesterday, but hopefully everyone can read my handwriting in however messy of a way that it arrives. But we'll see how this goes. And yeah, hopefully we can get some nice stuff. I've got something planned here, probably right when market opens. We'll do a little breakdown about orders, entry technique, and things along those lines. I think a lot of people are still solving for the wrong thing potentially. So hopefully that helps people kind of get all organized and set up and kind of going the way they want. So bear with me here, guys. We will chat about that a little bit here this afternoon, or sorry, this morning. All right. From an economic calendar perspective, we've got PMI at 9:45 and 10, and then crude oil inventories here at 10:30. So again, probably expecting it to be a little bit of a slower start to the day, and that just might keep things a little bit more casual. But we are looking for a good continuation move here, or a trend move would probably be the better way of describing it. So let's start mapping things out. Let's figure out what we want to do, and then let's go from there. So we'll talk about that a little bit more in detail, John. But yeah, it's we'll talk about the pros and cons again. Like the thing that maybe I look at philosophically a little bit different than most people here is a lot of people are looking for the best way to do something, where the best way doesn't really exist. It's the way that solves the most amount of your problems, right? So we'll talk about that in a little bit, but yeah, that for sure is something that's been kind of top of mind for me so far this week. All right, yes, we're looking at a 2 out of 3 to the downside with volume. And I mean, it's kind of tough to know what to do with this overnight reversal, right? For sure, kind of indicating potentially mean reversion. That's a pretty big failed move. 50 points is quite a lot on ES. So maybe there's something there, and like a little move towards 68 to 10, and kind of like get a little relief day. But my primary target, I would say, it would be to the downside, right? Or that downside continuation. Especially if we can get a good amount of selling pressure here off the open, or a little bit more like enthusiasm once those data points trigger at 9:45 and 10. So for me, it'd be a 67.50 kind of starting point, which is, I mean, crazy far away to the downside. And then, you kind of have it mapped out towards like 700. And then to the upside, I mean, look, mean reversion is in play. But we're only going to be interested in it, right, if the whole general market is cooperating. If it's giving us some oomph and we're seeing that consistency across the board, then yes, we can kind of climb through some of these 6800s. And we'll go like 6850. Cool. So again, going to be a little bit cautious with the upside narrative if it does come together, but look, we're still so close to all-time highs. This still kind of, you could argue it's a channel. We kind of talked about that a little bit yesterday, right? Just kind of looks like a bit of a fake out maybe through that area. Look, we can draw a million lines all at the end of the day to find a narrative that suits our thesis. But I think having a little bit of flexibility in both directions has been working really nicely for us here as of late. So I'm not going to change anything too much, but I do have a strong bearish bias. All right, the old NQ. So double inside bar breakdown there yesterday, right? Did a little gap fill, and then a little bit more of a pronounced mean reversion look here this AM. Yes, right. As we're watching it, kind of flirting between not or not. So what would signal market cooperation? ES and NQ. So we'll look at the leading names here in a little bit, Mike. So we'll look at, Apple through Google, and we'll basically be watching those, right? Are the internals syncing up? Are the names that have the largest weighting in the index behaving reasonably? And if they are, that would be our chance, right? I was looking for a consistency on the index level and then also in the internals. So similar narrative here, right? 2 out of 3 to the downside with volume. Upside, we're looking at a 25.6. Oh my gosh, these numbers change so fast. Called 25.7, and then we'll just go to 26,000. Okay, and then to the downside here, we're looking at a 25.3. And then again, going down to 25,000. So like that symmetry there, we'll keep it as is. Oh, did I just fuck this? Whoops. Not enough coffee in my system yet. Okay. And then, like I said, to the downside, 300 and low. Yeah. All right. CL. So CL's got data here, 10:30. I'm just not going to bother with it today. It's been Wick City, not been super tradable for a while, so I'm just going to leave this for today. I've traded inventories day once this entire year. I don't know. It's not worth the stress. Okay, Apple, green candle, decreasing volume, gap down. So 1 for 3, non-trending price action. Tesla, red candle, increasing outlier, big gap up though. So this may be setting up as an inside bar. Right, I'm saying inside bar or consolidation because it's opening up in the implied middle. Microsoft, green candle, decreasing volume, gap down. So again, 1 for 3 to the upside. Amazon, red candle, decreasing volume, technically a gap down. So 2 out of 3 without. Smaller gap ups and gap downs than you'd think with the size, right, of the overnight move that you saw, or the range of the overnight move. Nvidia, 2 out of 3 with volume to the downside. AMD, 3 for 3, had earnings yesterday, beat on top and bottom line, but still gapping down. This is a textbook mean reversion setup. Strong earnings shelf, but gapping down, right? Earnings are going in the opposite direction of price. You'll see those bears take some profit early, and then usually, I don't want to say guarantee, but usually you get a nice little gap fill type setup here. Meta, red candle, decreasing volume, gap up. So again, 1 for 3. A lot of consolidation, right, / indecision. Netflix inside bar, nailed that yesterday. And then Google might be increasing volume here. 30. Yep. So just barely increasing volume. Green candle, increasing volume, gap up. So 3 for 3 to the upside. And we'll call this a week 3 for 3. I know we absolutely just blasted through those leading names. That was so fast. But did you guys notice any patterns there? Or anything that maybe stuck out? Or would you say that everything looked, I don't know, just a little bit different, or a little bit like just a little bit of variance? Yeah, there's a big dispersion, right, between what's going on, or what the market is doing. So we want to be a little bit patient, right, a little bit cautious here. We're probably seeing an early indication of consolidation, right? And then hopefully the data can basically clear out some of that stuff. Before we have to deal with it, to be honest. So let's see if we can get ourselves a little bit of oomph. And yeah, let's have ourselves a heck of a day here, team. Let's have ourselves a heck of a day. All right, we got 2 minutes here till market open. I'm just gonna go fill up my cup of coffee, and then we'll jump back on here right as the session is starting to be back at it, guys, in a minute or so. We'll chat then. All right, we're back. So let's have ourselves a day. Like I said, probably not expecting too much action here as we creep up in towards that 9:45 data. Right, just gives me a little bit of hesitation. In general, right, maybe won't get anything until about 10 a.m. here today, or 10 a.m. or later, just based on the data calendar. So we'll see how that impacts price, but doesn't mean we're not going to use this time here effectively. So I feel like the theme of the last month here has been focusing on execution, focusing on making sure people are catching all the trades, and things along those lines. And a lot of people, I think, are not being selfish enough in what their trading is indicating, right, or what they're looking for. So let's break it down from like a philosophical perspective first, or how I'm trying to set things up, right? When I'm in the stream here, when I'm showing you guys my trades, my objective is to box in my setups for you and for you to have all the information you need to be able to figure out your position sizing, right? And your entry timing. The only way you're going to be able to effectively copy my trading strategy is if you take care of those variables yourself. The reason why I say it that way, right, is because if you're waiting for me to say that I am in a position and then you are setting up your order window and then you're clicking submit and you're figuring out your position sizing, you're no longer taking the same idea, right? You're going to be 15 seconds behind, 30 seconds behind, heck, even a minute behind potentially what my original entry was. And that's going to mean that you get a very different end result. So it's going to mean, right, that when we lose money and the trade has gone in our direction before we've entered and you've chased it, that you're going to lose more when we're wrong and you're going to make less when we're right. Fundamentally, that is a broken risk reward equation for you, the viewer. And it's why I do things the way that I do, right? I'm trying to show you what my entry zone is going to be before it ever happens, and then walk you through my thought process as we pull into that entry zone so that you can make the most like the decision with the most complete amount of information, right? So you have everything you could possibly need to make that decision, to decide if you want to take that risk or not, and then to go from there. So when I box in my trades, when I show you guys my reference price, that is why it's called the reference price, right? It's so that you guys have a reference on the screen so that you know where I am looking for my trades or where I am looking for my entries. Your job then, right, when those elements come up is to start to prepare your order window and make sure that you're set up so that when price comes into that zone, you're just watching price action and you're not just trying to set up an opportunity so that you can chase an entry. So that's philosophically, right, what I'm trying to do with how I show up or set up my screen, right, or what I show you guys on my screen. And it's to give you all the information you need in a very tight window over, what I'm looking to accomplish. Now, if your objective is to get the exact same entry price as me on every single trade, hate to break it to you, that's not going to happen, right? All I'm thinking about when I am entering trades is, am I getting a better entry than the reference price? My only thought at that moment is, how can I get away with the biggest discount I think I can get away with? What that looks like in my entries, right, is we talk about that elevator down, stairs up, or stairs down, elevator up, and looking for those correct reactions, right, effectively helps me figure out my entry timing. So seeing price kind of creep up, right, and start to stall ends up being the reason or the point when I'm looking for my entry. So when we are now inside that reference price, right, you should be watching on your screen for that moment where price stalls. That could be for a second. That could be for a microsecond, right? That could be for 5 seconds. It's all going to be relative to the price action, to the size of the move, to the sort of intensity of the volatility. And so everyone is going to be a little bit different. And this sort of the part of trading where it's like more art than science, right? But the way that I want to do that is, the science element is, if I'm inside my reference price, I should be in that trade. The art price is, okay, how can I now improve my execution to get myself the biggest discount and to increase my margin of error, right? How can I use my quote unquote artistic technique to make my life easier? So that's the objective, right? Trying to make every entry decision to make my life easier. That then means, right, you have to be deliberate over what entry technique you are using to define what that deliberate is, right? Or what that easy for you is. If you're missing a lot of trades, then maybe the wrong thing for you, right, is to be super precise and to be picking and choosing when your primary objective is to just be in trades. And we need to be selfish over what our problems are, right? Or what our pain point is as a trader, and then look to use the market tools that are available to us to be able to execute those ideas. So if you're a trader who is looking for price to pull into the entry zone, but seemingly every time you click submit, you miss the fill and you don't get in, well, your current entry technique is not making it easier for you to be the trader that you want to be, right? You've got something there that isn't working. And the easy solution or the easier solution is to use a market order, right? A market order is going to prioritize getting you into the market instead of prioritizing getting you in at any price. So the pro of that, right, is that if you are looking for fills inside your zone and you use a market order, you will get a fill. But every now and then when things are volatile or things are moving fast, you're going to experience slippage and you're going to spend a little bit of time in the red on a lot of your entries. Sometimes that slippage will be a point. Sometimes it'll be 5 points, and it really depends on each individual circumstance. And there's going to be pros and cons. But the pro of that technique is that you will stop missing entries. You're not going to be left in the dust. You're not going to feel as if you're missing out on something. And you do have permission to use market orders. Just because I use limit orders or because I use that technique doesn't mean that's what you have to do either, right? I am trying to solve for potentially a different problem than you are. So when I'm entering a trade, right, when I'm looking for it, I am solving to try to get the largest discount I can possibly get away with. That is my primary focus. I don't feel like I miss trades. I don't feel like I miss entries, right? So I'm not solving for that. And fundamentally, I have a little bit of an advantage there because intuitively, right, I'm always going to be more prepared and be aware of when I'm going to click submit than you guys are, right? Because I know what's happening before I can even say it. So there's a little bit of like an advantage there that I have as the one who's calling out those trades. So it means that I'm not reacting effectively. And so limit orders are potentially an easier solution for me, right? Or solve for me a different problem. So I'm looking for precise entries, right? I'm looking to get the price that I want, and I'm looking to lock in my risk because I'm not worried about not getting filled on my trades. I'm pretty confident that on 97, 98, 99% of the times I want to get into a trade, I will get into it. So I'm then solving for a different problem. What you're going to find happens, right, is that by getting comfortable using those market orders, executing trades, learning to get confident using that pullback technique, right, buying on the downtick or selling on the uptick, and getting used to that rhythm and routine, you're going to have things slow down for you inside your execution process. So you're going to be a little bit more controlled, right? You're going to have a better feeling of how your dopamine reacts. You're going to have a little bit more of a deliberate process. You're going to have more evidence, right, that you can actually catch the winning trades. And that's going to make you more confident, right? That's going to help you improve your technique. And it's going to give you a data point that you can study to further train your eye and slow down that process further. So when you take a market order, right, or you get an entry and you think you got a good one, well, now you're comparing, right, your execution price or your fill price to the reference line and my price. Did you get under the reference price and did you beat me? A good entry is anything that is better than the reference price, right? And a perfect entry is anything that beat me. So you now then have two data points that you can study, track, and compare against, and further refine your technique and slowly create that improvement that generates that consistency. So again, right, you need to be deliberate over what execution problem you are trying to solve. If you are missing trades, if you're skipping setups, if you're clicking submit and orders are not filling, then you are not buying on the downtick, or you're not buying as price is moving away from you. You're effectively chasing the move, and limit orders are not going to execute because by the time you submit your position, price is already away and above whatever you submitted your order at. You're not going to get a fill. It's going to hang there for 30 seconds, 40 seconds, a minute, maybe never even retest that price again. And you're going to be left in the dust as the team makes money. So figure out what your execution problem is, right? Figure out what the easiest solution to that is. And then once you have that technique, you can refine it, you can improve it, you can use your journal and your data to get better. But this idea that you're going to do something and you're going to be perfect at it right away is a completely limiting belief. It is something that does not exist and will not exist. And there is no such thing as a perfect technique, right? It is the one that solves your problems and makes your execution easiest. That's the primary focus. So just because I use limit orders doesn't mean you have to use limit orders. Just because you use market orders doesn't mean I have to use market orders. Find the problem that is costing you money, that is preventing you from catching your trades, and make it easy to solve that problem. And then use your trading journal, your data, and your ability to review that data to improve your technique, get better, and train your eye to slow down so that you can graduate, right, to something that's a little bit more quote unquote complicated. So what I want everyone to focus on here, right, is the objective doesn't need to be perfect right away. Expecting yourself to be perfect is actually quite limiting, right? It can be quite paralyzing because it removes our ability to make mistakes. So instead, make it easy for yourself to collect data, to get better from that review, and to improve your technique that way. That's going to be how you drive your progress. That's going to be a much more sustainable feedback loop, and it's going to give you a much smoother learning curve where things don't feel so herky jerky. So again, like, people should not be missing trades here when they click submit. The percentage of trades that are missed because people are using the wrong technique for their problem is unacceptable. And it's something that we talk about in every single person's introductory call here. I ask everyone to be selfish in attacking their trading problems, right? In the things that cost them money, and to be selfish in addressing their learning curve. Too many people aren't doing that. They're trying to be, or trying to fix problems that they don't have. And for me, it's very important that we get over that and we start being a little bit more selfish and actually start fixing the things that cost us money and make us money, because we should not be missing trades that we intend to take. And there are very easy and simple fixes to that, but none of those techniques are going to be perfect. And regardless of what you do, you are going to have to refine it, improve it, study it, track it, right? And then you'll be able to find your patterns, your triggers, and things will slow down. So find the thing that makes it easiest for you to do that, and then just embrace that learning curve, because there is no working or avoiding it. Any questions? No, there is not. There is not a constant distance between the reference price and the stop loss. That is unique to each individual setup. And look, guys, if you're going to use the limit order technique, right, and you're trying to focus on that, and you take a trade that I don't take, that is not a big deal either. Who cares, right? Get out. Like, you can just close it. You don't have to stick around and play it to completion. You can just get out of that position. And then now you have another data point, right? Why did I feel confident clicking submit when Michael didn't? What did I miss maybe in the run up towards that price action that Michael didn't? So again, stop expecting yourself to be perfect. No matter what you choose, there are going to be pros and cons to that technique. So find the ones that you are happy with, learn to live with them, and stop expecting yourself to be perfect because it does not exist. And I'm not going to be perfect either, right? I'm going to make mistakes. There are going to be times where I enter in on fast pullbacks when I should have, when I don't see the elevator, when I make mistakes. So it's not like a singular outcome is like just the dumbest thing to focus on, because it's not what trading is, right? Trading is a long-term game where we need to figure out, right, how we can control our variables. All right, we have a setup here to the upside. 945 data has cleared. We closed right at 600, so very positive look here. We want to see a little fake out lower, right? And then we can establish our reference price, right? And a move to the upside. For now, our stop loss here is 589. And that was a little bit of like a tennis bounce back. Let's see. Again, still no reference price, right? I'm being patient. Okay, again, we have not missed out on anything here yet, so be patient. Does everyone have a better plan on how they are going to execute their trade if one sets up today? Okay, so this 2 min would still behave as our confirmation. Again, we're looking for some sort of indication of a bearish failure. The most likely area for that to happen, right, is around that 600. We just got a 5 min close as well, so we got lots of options here, guys. Okay, so now would be something like this. Stop around 6. I don't like the size of that risk. A little bit punchier than I want. We got 15 seconds here on this 3 min. I'm going to look at it from this perspective. This 945 continues to act as my confirmation. A good bullish momentum, right, on some of our leading names. We can absolutely look for this upside scenario. All right, well, that was a really nice little tennis ball bounce back. Reference price here. Let's see if we can get a little fake out again. Reference price would be based on the confirmation high here, right? So 627. So I'm going to start to set up my order at this point, right? See if we can get a nice little gentle pullback into that zone. I'm going to wait. Don't have everything set up yet. So 620 would be my stop, and I'm looking under 627.75. So let's call it under 627 as a gentle pullback zone. If this doesn't give me an entry here, we'll reset to the 2-min time frame in a moment, and we'll get a look there as well, potentially. So we're still within striking distance. Watching carefully here now. Hey guys, I am in execution price 623.50, stop loss 620. And this thing moved pretty much perfect right at entry. I got 4 contracts on this. Okay, let's see if this can keep going. I don't like the little baby stall out here a little bit. That's bothering me just a tad. But in really, really, really good shape. So let's see if this thing's got one more decent pop. There's 20 points, guys. Fantastic start to our AM. Let's see if it's got one more pop in it. Here we go. Here we go. See if we can get through 50 now. Beautiful. So far, so good, guys. So far, so good. All right. Let's see how this candle closes. I'm thinking about closing here, though, guys. Truth be told, this is a really nice P&L move. So I'm going to see if we can get another little pop through 60, and then this is going to be my exit target here. All right, guys, I am out. Exit price 663, 663 on the dot. Took my 30 points. Let's go. Excellent, excellent, excellent start to the day here, team. Let's go, guys. Let's go. Everyone feeling confident with their execution? Austin, what happened, man? Come on. James, why didn't you trust it? Like, what about that trade? So, Austin, we spent the first 15 minutes talking about if your issue is executing trades and you're using limit orders, that you're not using the right thing that solves your problem. Why didn't you try to do something different? Why did we not follow that advice? Guys, like, I can't give you the David Goggins locker room speech and then also click the button for you, right? Or to make you to change your technique. You have to want to do that yourself. There's only so much I can do, right? No, but Austin, for the most part, you miss the big wins. So I know you're not blaming me. I'm blaming you for not fixing your technique and solving that problem. Right? Entry price was 623. If you got anything under than the reference price, guys, that's a great entry. Fuck's sake, I can't. I don't understand. I don't understand how to make it more clear. Really don't get it. No offense, Chris. You have no perception of what the elevator looks like because you have no like practice executing those scenarios where it isn't that, right? So you're seeing the thing that you're afraid of. Yes, there's data at 10. Guys, I can't believe it today. Like your perceived problems crazy. Yeah, it was perfect, Kiki. It was a textbook execution. We spent no time in the red. We closed near the peak of the move, and we had effectively zero risk. Like it was an absolute perfect trade. Like there is nothing more A plus about it. It moved so fast that there was no reason to doubt that it was strong. It gave us the exact perfect reaction we expected when we get a nice breakout trade. Like, I don't get why people are talking themselves into making things worse. You have no evidence that that actually makes you any extra money. So why are you so addicted to listening to that version of yourself? I really don't understand that. That is the thing that I cannot comprehend. Yes, there was a live execution. We entered a trade, we closed the trade, we won a trade. Oh man, I feel like I'm talking out of a fucking wall today. All right, guys, I'm gonna go take a little walk. I'll be right back. So, Austin, right? The point why I'm giving you feedback like this is not that you should be afraid that you opened your mouth. It's that you miss a lot of trades, right? So we gave you the fix on how to do that, like how to avoid that problem, and you chose to not take that fix. That's the frustrating part, right? Because you wanted to take that trade, but you didn't get filled. We told you how to get filled. And if you would have clicked at 624 with a market order, you still would have gotten filled less than the reference price, and it would have been a good trade. Right? So we got to use the information you're given to fix the problems you have, not just keep bashing our head against the same wall. If we start entering trades, if we start getting that feedback, if we start collecting that data, now we can refine it. Now we can get to be more precise. Now we can improve it. We spent 15 minutes talking about that before the trade ever came together. That's why it's frustrating. You get immediate feedback and you do the opposite. It's not how you get better. Yeah, I generally don't trade Shiv going into data. Kind of rule of thumb is just like 1 minute before, 1 minute after. It's mostly just to avoid the algo risk. Like you'll just get whipsawed every now and then, and you'll have the right idea, but just very high probability of getting faked out. Hey guys, that was like the easiest 40 points we'll make all month. Ugh. Nice work, Nautilus. %, Jason. 100%. Yeah, but that's what I'm saying, Austin, right? You use it to start in to hone your technique, right? Like you're not going to be able to improve your trading if you're not in trades. And like why the limiting belief of not using market orders? I use market orders on 66% of my trades. Right? On my stop losses and on my exits, I'm using a market order. So why is that such a limiting belief? I go in what the risk is telling me, Sean, right? So my risk on that trade was 3 points. I want to keep my max risk to be less than $500. So I had $60 worth of risk per contract. So I probably should have gone more risk than I did. Let's go, Kiki. Nice work. And look, I also today you're back in after traveling, right? Guys, I gave you an entry zone that was 7 points wide. Right? 7 points wide is very, very precise in a $26,000 stock or 26,000 point security. So anywhere in that 7 point window is a good entry. Let's go, Kiki. Congratulations. Yeah, I think I did a very clear job explaining that trade. I don't know. I'm a little bit annoyed after that, to be honest. Like 3,200 bucks and like literally 3 minutes. Yeah, you get positive slippage, right? Like it goes in your favor. So if you practice on getting in on the downtick, right, while you're using market orders, you'll get positive slippage. It's just that when you chase trades, right, and your technique isn't perfect and you click submit, okay, you'll get a fill then at 67 instead of 66.25. So you'll still get into the trades and you won't get punished, but you'll still get the opportunity to practice buying on the downtick, which will make executing those limit orders easier. It means that it's trying to get filled, but it's away from that price, right? So it means you have a limit order that's working to get filled. I made a video on that the other day, CD. I would recommend reviewing it. No, I'm not Austin. I'm not viewing this as a critique of my efforts. What I can't comprehend is that you have missed a lot of trades recently, right? And we told you on how you would stop missing those trades. So I don't understand why there's resistance to try that and then to improve your technique this way. That is why I am annoyed. Because the fix is super simple and obvious. And so that's what I don't comprehend. I don't want you to be missing trades. You shouldn't be missing trades. So how can you improve your technique to do that? We outlined that for 15 minutes before we took the trade. So ignoring that is what's annoying. You got to stop expecting to be sure, Jay Scott, right? You got to get rid of that voice in your head. It's a binary. If price is above is not moving too quickly, sweet. The second it pulls into my price, I need to be thinking about I have to walk away with an entry here. So that problem is a psychological one that you are creating yourself. You have to have a better plan on how you're going to be doing that. That's a you problem, no offense, right? So your perception of how quickly it is moving is what's causing you to miss those trades. The only way that you're actually going to improve that perception is to take those trades without hesitation, to create data around was that the right decision or not, and train your gut. That's it. So again, we spent a lot of time talking about how everyone's like expecting themselves to be perfect instead of expecting themselves to get better. That is the symptom of expecting yourself to be perfect. James, your solution to avoiding your panic exits is to be deliberate in what you expect a trade to behave like once you are in it, right? So having a more specific plan on how you expect a strong trade to behave is going to allow you to stay in a trade. Nothing about that trade told you it was weak, right? You were green right away. It separated away from your entry price. It ran through those round numbers easily. The candle closed with a strong shape, held higher highs. So what told you that the idea was weak, right? Appreciate that, Braden. Well done. Yes, and if you take trades that you shouldn't have taken, Chris, you just close them and you get out and you get impartial. And now you have a data point Okay, what did I see that Michael didn't see? Oh, Michael, I executed this trade. You didn't jump in. What was different? And now you've got something that you learned and you're getting better. But guys, trying to be perfect is really paralyzing for a lot of people. It does not exist. We got to stop trying to be perfect in all of our decisions. That is not the reality. It is paralyzing you. It is forcing you or tricking you into skipping easy wins. And then it becomes a self-fulfilling prophecy because now you're more and more desperate to be perfect on the next trade. And then you hesitate more and you miss it, and you miss it, and you miss it. So the only expectation is that I expect myself to learn from each trading decision. I don't really care what the outcome is. Right? The outcome on a singular trade is beyond random. So stop expecting yourself to be perfect and just, hey, hold yourself to a standard. Even if I make a mistake, making a mistake is okay, because the only way that I'm going to learn and get better is by making mistakes. So this like aversion and trying to optimize to never make a mistake is not working for you. It is working against you. And it is having the opposite effect of what you think it is trying to accomplish. Well, this isn't paper trading. That's why I'm giving this feedback. Guys, our only expectation, right? How can I create data, track data, learn from my data, and get better? If I am not interested in collecting that data, holding myself accountable, studying from what I did, and changing my behaviors, I will not make money. I'm like, guys, like I'm one and done for the day. I'm not placing any further trades here. Made $3,200 in like 3-4 minutes. An absolutely perfect textbook trade. Right? Like this is the days that you dream of, right? The days that you want. Like this is the only thing you crave as a trader. These days are really hard to find, get, execute perfectly. And they build that margin of error for us, right? Without the ability to allow our average win to be bigger than our average loss, the numbers game doesn't work, right? Let's go, Sonia. Congratulations. There's almost there's a weird psychological curse with trading, right? Is that sometimes we try to be too patient when we should be aggressive, right? And we're too aggressive when we should be patient. Like, I think for a lot of people, or let me phrase this a little bit differently, because I mentioned this to someone last night, and I think it's a good frame of mind, right? For a lot of people, it's just the fear of making a decision, or the fear of being wrong, or the fear of whatever it is, right? That is like preventing you clicking submit when you want to enter trades. And so then you find a clever reason, right, to justify that fear, and you end up not taking a decision. It's almost like similar to like cliff jumping, or like jumping off a high diving board, right? Where you see something, you get a little bit scared, and you end up not going with that fight or flight response, right? You do the flight where you walk off the diving board, you step back from the cliff, you don't go off that jump or whatever it is. Or you don't do like that rope swing or whatever it is, right? And the way that you get over those things is you just give yourself a way to rewire your dopamine, right? And you change your ability to basically control that fear. So the thing I said to someone there yesterday, right, is when we're inside that reference price. So let's say that, again, just a hypothetical here, right? Not a real trade I'm taking. Let's say I was in a trade or looking at a trade like this, and my reference price was the high of my confirmation. Once it's under my reference price, it is literally just out loud 1, 2, 3, click, right? In the same way that when I used to like ride mountain bikes and I was scared of a feature or like do dirt jumps, I still ride mountain bikes, and I was scared of a jump and I was, staring at the roll-in, it would be 1, 2, 3, pedal, right? And just rewire your brain or stop yourself from having to overthink by giving yourself that physical thing, because your job isn't to be perfect on that decision. Your job is to collect data. And if we are missing opportunities to collect data, then we're not doing our jobs and we're avoiding our ability, right, to get better. So we got to stop with this paralysis. It is costing us a tremendous amount of progress. It is slowing down how quickly we improve, and it's preventing us from compounding good decisions and actually learning, right, from our trades. So if you're struggling psychologically, right, you just need to reclaim control over that decision. So think about it from could be even 3, 2, 1 submit, 1, 2, 3 submit, right, whatever it is. But you need to find that control over it that is not based on emotions, because you cannot trust your emotions. They are a liar. They are tricking you into doing what is easiest, not what is best. And we need to stop rewarding that like addiction into following each one of those impulses, because it is not making you money. You have zero evidence it actually makes you more profitable. And you need to be an adult and actually train your gut and those impulses to work in your direction instead of needing validation from them when they have no basis of fact. So Ghost, that's going to be different for everyone. Look, you're up 5R, give or take. That's a great day. For me, I don't know if I necessarily have a number. I just know when I should. That makes sense, right? So it's like if I even am thinking about I'm pretty happy with the P&L, I should just walk away. So like guys, our job as traders, right, is if a trade tells us it follows our rules, we have to take that trade, right? The number one rule of systematic trading is that you don't break your rules, and talking yourself out of entries is the dumbest rule you can break. There's nothing that we can learn from it, right? When we don't get the entries that we want. Look, we're all going to miss trades for sure. Like we're for sure going to have times where we miss them. Those are going to happen. Those are going to occur. But it's never going to be 60, 70, 80% of our trades, right? It's going to be 2%, 3%, 5% maybe. So we have to find a way to make it easier for ourselves to collect data, because collecting data is the only way we learn and get better. And the absence of collecting that data is negligent if you're a trader. You're literally just making your life 10 times harder. And I want you guys to know, right? Like, I'm giving you this feedback because I want you all to be in these winning trades. right? Like I care about that a lot. So it is not it's not because I'm just a grumpy prick. Can be for sure. But I'm giving you guys this feedback because I want you all to make a lot of money, right? Like I do care about that a lot. So yeah, I'm trying to fight with your internal dialogue. That's a losing fight, I know. But I want you all to be getting these winning trades, right? I do care. I appreciate that, Kyle. Love that, man. Yeah, it was a great day. Really strong trading day. Like literally spent a second in drawdown. Like it's the best feeling in the world. Yeah. That's like CEO money at that point, right? Not sure if I understand your request, Captivict. No, I don't plan on placing any further trades today. I caught the easiest part of the move. Like I don't want anything else to do with the price action. Oh, Jason, I mean, last month it's been like that. Last 2 months it's been like that. Well, I mean, that's kind of a hard ask, Captivict, right? Because if I'm telling myself I'm not going to be placing any further trades and I'm not going to be going through stuff, I don't want to then talk myself into a play by scripting it out, right? I want to make it easy for myself to answer questions. The way, if you want to get better, right, is you take the DTR ORB cheat sheet, you go through the day's price action, and you label all the setups that you think occur, right? All the confirmations. And then you send that my way, and I'll say, yeah, you did it right, or you did it wrong, or here's what it is, or here's what that is. But that's how you get better. Me doing it for you is not going to do shit. Yeah, I've got a couple days off next week. Wednesday, Thursday, Friday off, and the Monday. The stream schedule, guys, was updated October 1st. And you can find that in the Discord under the stream schedule tab. I've got a conference I'm going to first week of December for a couple days. So that's also listed on there. Kind of an annoying travel year. I basically had all my like commitments from September to December. So it's kind of annoyed that it all stacks up. I'm so sick and tired of driving to the airport. Yeah, you have a great day too, Mikey. So, if we were to learn anything from today, like if I were to say anything from today, right, that I think people should take to heart, is that our job as a trader isn't to make money or to lose money, it's to collect data. The only way that we can collect data, right, is to take the trades that follow our system. If we're missing the trades that follow our system because of either our entry technique, right, which means your timing of when you click submit, or your psychological fears, then you need to find a solution on how to overcome that so you can get back to doing your job, which is collecting data. The two solutions that were prepared for everyone here today, right, was the 1, 2, 3 submit system, right? Once it's inside your reference price, and then to use market orders and practice on buying as the move is going against you. So if you're going long, right, to go long on the downtick. If you're going short, to go short on the uptick, i.e., as price is moving against you. When you practice and build confidence with that, you now get back to collecting data and you can improve your technique and get closer to doing the quote unquote optimal one, which is being precise with your limit orders while setting your ask or bid at 0. No one should have any excuses over missing these trades. We should all be taking them, right? Every time we talk ourselves out of a trade, win, lose, or draw, we are cheating ourselves of collecting that data. We are cheating ourselves of actually doing what our job is, and we're obsessing over not making mistakes. We're going to make a billion, kajillion, whatever mistakes, right? We're going to make more mistakes than you could ever imagine. And making a mistake is not a bad thing. The only way that we can learn, the only way that we can improve, the only way that we can get better is by making those mistakes, right? And then collecting data on them and figuring out how we're going to behave differently so that we don't repeat it. When we choose to not be deliberate in our study or the standard that we hold ourselves to, then we cheat ourselves of collecting that data. We cheat ourselves of getting better. And we cheat ourselves of getting our future gains. So, yeah, everyone has the tools they need to be able to do them, right? Like no one else can force you to. You ultimately have to make that decision yourself. You're an adult. Like no one is gonna tell you whatever you shouldn't or you should. You have to make that decision. I think most people here deep down, right, joined this program because they wanted to improve their quality of decisions. And then choosing to pick and choose, right, they end up getting the worst variant of them. And so I would say that that is probably at odds over why you joined DTR. So at some point, we have to get over it. We have to stop expecting ourselves to be perfect. We have to stop expecting ourselves to never make a mistake. We have to stop being afraid of losing money. Like we all lose. We're all going to have losing days, losing trades. But literally, if you just follow the rules and you follow your system, we're going to make a lot more than we lose. Like, I haven't had a losing day in like 30 trading days, 2 months of real time trading. So if that isn't like rational evidence that following the structure and following the rules works, I don't know what else to show you. Like, I don't know how else to convince you. Right? So at some point, we have to commit or decide that we're sick and tired of making the same mistakes, the same problems, repeating the same bullshit over and 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 over again. And we have to just commit to getting better. When we commit to getting better, that is the hardest fight you're going to have as a trader, because you're now overcoming your internal dialogue or whatever your limiting beliefs are. And because you've given so much power to those limiting beliefs and that internal dialogue, it now feels like it's David versus Goliath. That is not the reality. The idea of fixing those things is scarier than actually fixing them. The idea of studying or collecting your data versus actually doing it is scarier than it actually is. So we gotta stop being fucking pussies. I don't know how else to say it. Like, I don't know. It should not be a foreign thought to want to believe in yourself and trust yourself. Right? Like, if you're not going to believe in yourself and trust in yourself to figure it out and to get better and to actually put in the work, like, you're screwed. No offense. Right? If you don't trust yourself, like, no one's going to be able to fix it for you anyway. So why be afraid of believing in you? I think I said this last week, but I would rather fail trying to reach my maximum potential. I'd rather get gunned down in the streets trying to do that than being at my deathbed at, I don't know, let's say 65. I'm still young, so that feels far away. And feeling like what could have been, right? That's a much more painful death, in my opinion, because I also know that if I just believe in myself, then the failure will not happen. So, like, why wouldn't I just do that from the get-go? I don't know. That's a conversation I guess you have to have with yourself. Can't force you to do it. Can only just show you the positives of what happens when you do. But yeah, I don't know. I can't want it more than you guys. I can't want it more than you. You have to want it the same way, and then you got to make your actions match your words. All right, guys. Any questions here? I'm going to go enjoy my morning. Any questions? Because we haven't had a single losing trade all week. And we're afraid. I don't get it. All right, guys. Final call for questions. Final call for questions. Yes, in the daily debrief channel. Pinned message. Yeah, there'll be a stream tomorrow, and there'll be a stream on Friday, and there'll be a stream on Monday, and there'll be a stream on Tuesday. I trade every day. You pull the trigger, Leonard, right? Like, guys, the whole point was make it easy for you to get data. That's it, right? Because then if you have something that you have data, now we've got something that we can improve, right? But if you've got no orders, no fills, phantom trades, and then you book a one-on-one call, we're puffing smoke. We're not doing anything. It's a waste of fucking time. So the only way that you can get better is to get trades, collect data, figure out what you're doing, and then improve it. If you're missing trades, use market orders, because at the very least, you'll get an entry, and now we know what we need to fix. There's no fixing phantom orders. I honestly can't believe how many times I have to stress this. It's crazy. But guys, it is not hard to pull the trigger. It is not difficult. I don't know what you did, Leonard. Watch back the stream from 9:30 to 9:45 today. Spent 15 minutes talking about it. I made a video about it on Monday. Spent all of last week talking about it. Like, again, I don't know. For fuck's sake. Anyway, guys, any other questions? All right, guys. Same deal like always. You have any questions, hit me up outside of market hours. But everyone just rewatch that first 15 minutes. I don't know how else to stress it. Too much bullshit with this, guys. Too much bullshit with this. Enjoy the rest of your day.